call it loving little loans. And so what do I mean by that? Well, in all my years of being in this business, one of the things I've noticed is that folks who need little loan amounts, small loan balances, I think to some degree are underserved. Historically, small loans could be relatively scarce and can cost more. Well, why is that? Well, in a lot of cases, even though the minimum loan amount that can be made for a Fannie Mae or Freddie Mac loan or an FHA and VA is actually quite low, well below 100,000. A lot of lenders didn't want to do that. So they would have, again, what we would call overlays, where they might establish a minimum loan amount that particular lender wants to offer that may be higher than what could actually be delivered to Fannie Mae or Freddie Mac, or that can be done with an FHA or VA type of a loan. So in part, that would create sort of a reduction in the number of lenders who can even serve that part of the market. Plus the fact a lot of lenders, and this actually even goes back to the agencies themselves, Fannie Mae and Freddie Mac, some of the price adjustment factors or loan level price adjustment would actually be kicked up for lower loan amounts, particularly if you got below 250 or below 200, and really pretty significant price edge if you get below 150 or 100 or 75. They could be very substantial. And so you'd end up with a case where even though a borrower may be getting a relatively small loan for the value of their home, they end up paying a higher rate than somebody who's getting a much larger loan amount simply because they happen to have a need for a very small loan balance, and that lender doesn't really want to make that loan. Now, with that background, what I want to let everybody know is that has changed. The industry, and in particular, the agencies, the government-sponsored enterprises, Fannie Mae, Freddie Mac, there is now a push for more support for small loan balances. That's going on right now. Most all the lenders that we deliver loans to are now offering much better pricing if you're in need of a very small loan balance. And what would we define as a small loan balance? Well, again, it kind of starts at about 250 or less, and then there's another kind of threshold at 200 or less, and then where you can really get a great enhancement on your pricing terms for a mortgage is if you're below 150. So I list all three of these, what I call balance buckets. And as you go progressively down on these buckets, you're going to see some pretty aggressive financing, or pretty aggressive pricing on the loans that are available. And in fact, if you really get low, like under 150, you can actually see on a 30-year fixed rate mortgage an interest rate available to you that could be as much as 3/8 to 0.5% below what it would be if you had a more quote unquote normal loan balance of, say, 350, 400, 500,000. So, and the reason for that is the agencies have waived almost all of the loan level price adjustments or price adds to allow those borrowers who need these smaller loan balances a much better deal. Now, this, by the way, it extends to a couple of what we call affordable loan programs that Fannie Mae and Freddie Mac have been offering for quite some time. These are called the Home Ready and Home Possible programs. Now, these are directly geared toward borrowers who are low to moderate income. And in fact, to be eligible, you have to have qualifying income within a specified limit based on your family size. But with these programs as well, which do tend to attract smaller loan balances by definition of them being for first-time home buyers, these programs also offer the same waiver of most price adds. So the pricing on them in terms of rate is very good. Plus, with these Home Ready and Home Possible programs, if you're eligible based on your income amount, actually give you reduced mortgage insurance costs, reduced PMI costs. So that's something to keep in mind as well. So if you've got a small loan balance that you're in need of, it's a great opportunity right now. And what kind of borrowers do these smaller loan amounts serve? Well, for example, senior homeowners or buyers who may want or need a small loan. They don't want a reverse mortgage. They do want a small first mortgage. They may need that. That's a great borrower who in the past has had to suffer with higher rates simply because they wanted a small loan. Another type of a buyer is somebody looking for the more affordably priced, lower priced condos, for example. Again, those borrowers in the past, those buyers would oftentimes be penalized, if you will, by getting higher rates offered to them simply because they wanted a very small loan amount. And then, of course, another product type in terms of homes where small loan balances now will have a better opportunity for better pricing is manufactured homes. Many manufactured home transactions involve relatively small loan amounts. And so that type of buyer now will have the ability to get much better deals on their rate than was happening before. And at MortgageWorks, we've always, we love little loans, as Jeff just pulled up here. Always have. I've always felt like that's a bit of an underserved market. I think anybody who needs a $100,000 loan should get just as much of attention and respect and fair dealing as somebody who's getting $1 million loan. You know, frankly, the file of paper that we're going to end up with when the deal's done is going to look about the same anyway. It doesn't really cost us more to process $1 million loan as a $100,000 loan. So we're happy to do each. And we want you to know that if you need a small loan, we love you as the borrower. We love your little loan amount, and we would be happy to assist you with that. So just keep that in mind. Little loans are at play right now. So if you need one, give me a call. I'll be happy to give you some numbers. Thanks, everybody, for watching. And just remember, at MortgageWorks, we have the answers, and they're on the house.